Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to bring you the market recap video for February the 8th of 2016. And what another fun day in the market for the bulls out there in La financial land. Let's start first with the S&P 500 very quickly. The S&P 500 came down off the highs, came back up off the lows of today pretty aggressively in the last 30 minutes to 1 hour of trading. But for the day so far, the S&P 500 down about 26 points at 1.6%, 1.42%, really sitting right here at a very important support level. That's right at 1850. As you can see it rebounded last time it tested the lows back here on the 20th of January, and now it's retesting those on the 8th of February as well. If it can break those levels, it's in a very precarious position, shall we say, because as you can see, this is your nice little downtrend in the S&P 500. You have a retracement back up into resistance right at that 1940 mark, which we've talked about a few times in the market recap video before. And now it's on its way back down below. Now, if it can break that level at the 1850 level, on your daily chart, you really don't have any levels of support here. There are 0 levels of support underneath that on the daily level. You're going to have to switch that out to the weekly chart. And as you can see, you're underneath the $1,900 mark. You're right here at that 1850, which is a very important old resistance over here. But underneath that, I really don't see anything concrete till about 1700. Yes, you do have a significant number in 1800, which is an old support level right there. But there's really nothing that's going to keep that from moving down into bear territory. And that's where a lot of us expect the market to go. I don't see anything in the underlying fundamentals of the economic systems out there in the global marketplace to say this is not going to continue to go down. I certainly foresee it to go down as well. And the question then becomes whether or not the market can hold up here at about 1850. If it doesn't, look for it to blow. And I still see a lot of downward pressure on stock prices today, even despite if you look at the last kind of 30 minutes to an hour where we had a really big boom back up in the market, which was kind of led by your energy stocks. XLB kind of led the charge back up. As you can see, you also had XLE kind of move back up in price as well after the drop. So energy-based materials kind of led that charge. Gold did some really good things. Really good things today did gold. As you can see on the 30-minute chart, just an absolute nice bullish trend on the 30-minute chart. If you switch to the daily though, right here at resistance, want to break out of that resistance. It is overextended to the upside, closed at its at a high point, the highest point gold has been since last summer, and it's on just an absolute ridiculous safe haven run out there. Silver, gold is outperforming silver, silver still underneath the highs from October of last year, but silver still has some room to run up. Gold overextended to the upside, but as you can see, the biggest concern is that in the S&P 500, which is underperforming, sitting at support levels, still has room to move to the downside despite the lift up at the last 30 minutes to an hour in the marketplace. Now, in terms of the dollar index still pressing the lows right around 96 to 97, kind of hovering between 96 and 97. It is in a short-term bearish downtrend. Is the dollar index looking at right at setting on a support level right here? If it breaks the support level about 96 and a half, the next support level isn't until down here about 94. That would be a really quick run to the downside. However, I don't foresee that happening without some degree of retracement. However, we are in short-term bearish downtrend on the dollar index. We're in a bearish downtrend on crude as well. Crude just sitting here right around $30, been hovering over right around between 27 and a half up to 34 with a lot of activity right here at that $30 mark. $30 has been talked about quite a bit in the markets as a support level for crude, and I certainly see it as such as well. VIX had a good day, obviously, as the market went down 1.5 points. VIX up right around 11%, pressing the highs of recent weeks, right between about 26 to 27 points on the volatility index as well. Your biggest decliner today in the market was financial breaking support levels. There is a tremendous amount of risk in the financial sector right now, circa spring, early summer of 2008. You did break short-term support levels in your sector ETF. XL left broke right out at $21, currently down about 20.42, and there is no support level underneath that $20 mark. If you look at the weekly charts, you're all the way back over to 2013 where you found support, and that does have support right at $20. Underneath $20, it can certainly move down even further off that $20 mark if it does break the $20 mark. But really, financials kind of led the charge. We're going to pull up a we're going to go to the Trade Center tab there over at tackletrading.com, and we're going to look at the heat map very quickly, just to kind of get a bird's eye view of what's kind of driving the market today. As you can see, basic materials had some mixture with your major integrated oil and gas, Exxon, Chevron doing some good things, ConocoPhillips doing some good things. Some other companies out there kind of mixed in the independent oil and gas, basic materials, oil pipelines just getting pummeled, with Williams Company down 34% today, down to 11 points. You also have some other specialty chemicals getting beat up. Biotech took it on the chin yet again. Veritex, Regeneron, Biogen, all getting beat up 3, 4, 2%. Your medical appliances equipment getting beat up as well. Utilities had a mixed result. As you can see, the financial sector just getting absolutely bloodied and butchered. Consumer goods had a decent day in the market today. So and technology got a little beat up, led by kind of a charge in Facebook down underneath 100. 100 is a significant whole number for Facebook, down over 4% today. One last thing, I have had some questions on the Tackle 25, and the Tackle 25 I don't want to say it's a growth list, but there are a lot of growth stocks on that list. There's some conservative stocks, there's some growth stocks on that list as well. Remember what the Tackle 25 is, ladies and gentlemen. It is not a long-term investing list. It is a covered call to caller type trade list. Whereas when we look at the marketplace and we're looking at potentially, say Ambarella, for example, when we put out the Tackle 25, it was right here into this range, right into here. And as you can see, once it broke support levels, you see Ambarella come down, down, down real hard. Well, it's at that point the Tackle 25 really proves its worth, because whenever we break support levels, we need to look to add insurance to the list to roll those covered calls into collar trades, so we can protect to the downside. And that's what the beauty of the Tackle 25 list. We'll put a system out there to really kind of show you how to do it, but it's not just a long-term investing list. Once again, we're breaking support levels on Ambarella. This might be an opportunity, if you're doing covered calls, to add that protective put option. Another one, let's look at Skyworks here. Skyworks broke support here. That's where you add insurance. Retracement, sell the call, add insurance. In terms of that Tackle 25 list, it's very important to not just hold those stocks. One, we write covered calls against it, but we also add the insurance to those covered calls as well. This week in the market, from an economics perspective, let's go ahead and pull up the Forex calendar very quickly. This week in the market, we're looking at no economic reports today. We have Fed Chairman Yellen giving a testimony on Wednesday. That is going to be very important as we look to what their take is on interest rates. The global economy is slowing. It's been slowing for a while now. We've been saying it at Tackle for over a year. The Fed has cut quantitative easing, started to raise interest rates in that environment. Is the market sell off with the financial sector itself down 14% year to date? We're off the highs of last year. You're looking at bear territory in financial. You're looking bear territory in revenues. You're looking at bear territory in your small and mid cap index. You're looking at bear territory in manufacturing sales as well. Consumer confidence has been lowered to a certain extent. So when we're looking at all these problems in the economy, the problems in the market with the sell-off and the bear really taking hold, is the Fed going to maintain their monetary policy of normalizing interest rates? And that's going to be interest coming on Wednesday and Thursday of this week, with retail sales coming in on Friday, as well as the consumer sentiment report. This is Matt Justice. Hope you enjoyed the tackle trading market recap video for February 8th of 2016.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.